Hey everyone, Ben here. So this whole GameStop situation, many of you guys have asked for my thoughts on this whole debacle. What's happened with GameStop? Why are they having a hearing at Congress? And what are my thoughts and reactions to this crazy situation? We've got a YouTuber right now who talked about a stock on the internet and now it's blown up and nearly bankrupt a hedge fund. So this is some major news and I'm going to dive into the recent videos of this and just share my reactions for you guys. This is a little bit of fun, this video, so I hope you guys enjoy it. If you do, feel free to give this video a big thumbs up. Okay, let's dive straight into these videos. So this is Roaring
I'm happy
Kitty.
to discuss with the committee my purchases of GameStop shares and my discussions of their fair value on social media. It is true that my investment in that company multiplied in value many times.
Wow, okay.
For that, I feel enormously fortunate. I also believe the current price of the shares demonstrates that I've been right about the company. A few things I am not. I'm not a cat.
What?
I am not an institutional investor.
Wait a minute.
Nor am I a hedge fund.
Did he just say I'm not a cat? Like, okay, this is just crazy. I can't believe he's got away with that with Congress. Let me rewind that.
I'm not a cat. I am not an institutional investor.
I'm not a cat. Okay.
Nor am I a hedge fund.
Hats off to him though.
And I do not provide personalized investment advice for fees or commissions. I'm just an individual whose investment in GameStop and posts on social media were based upon my own research and analysis. I grew up in Brockton, Massachusetts. My family was not wealthy. My father was a truck driver and my mom a registered nurse. I was one of 3 kids and the first in my family to earn a 4-year college degree when I graduated from Stonehill College in 2000. Early June of 2019, the price of GameStop stock declined below what I thought was its fair value. I invested in GameStop in 2019 and 2020 because, as I studied the company, I became more and more confident in my analysis.
So firstly, just a few points there. So I actually watched a video on this guy's investment style, and it seems he's not some crazy trader. This guy's actually a deep value investor, and even his real name, well, his YouTube name, one of his other Reddit names, shall I say, is Deep Effing Value. Like, this guy's a deep value investor. He looks for the real downtrodden companies, the companies that everybody hates, and that's where he decides to invest into. So that's what he's done here with GameStop. But really, it's very different than a standard value investment because you're looking for the stock to reach its fair value. But what's happened with that stock is it actually went exponentially high due to momentum from social media, not really due to the fundamentals of the company and, of course, the short squeeze.
2 important factors, based entirely on publicly available information, gave me confidence that GameStop was undervalued. First, the market was underestimating the prospects of GameStop's legacy business and overestimating the likelihood of bankruptcy. I grew up playing video games and shopping at GameStop, and I plan to continue shopping there. GameStop stores still provide real value to consumers and reliable revenue for GameStop.
Okay, so it seems like I am sort of on his side because he's a YouTuber and he's involved in stocks and he's an individual who's sort of beat the hedge funds. But he's actually gone along the whole sort of pathway of basically saying GameStop's a great company. He'd still shop there. He thinks it's a great stock. Obviously, it's a legal situation. You must have to say that. But I personally don't believe that. I don't believe he thinks it's actually a great company. I think he thought this could be a major trade, and that's why he did it. It's a short squeeze. It's a trade. He wants to get in, get out, and that's what he's done. And hats off to him. He's done extremely well off it. But I don't think he actually believes that GameStop is a good company.
Second, I believe that GameStop has the potential to reinvent itself as the ultimate destination for gamers within the rapidly growing $200 billion gaming industry. GameStop has a unique opportunity to pivot toward a technology-driven business.
See, I do agree with him on that point in that GameStop could have reinvented itself. Basically, when that stock went very high, what GameStop could have done was actually issued shares at those elevated levels, raised that capital, and then reinvented their entire business model. They could have done that, but they were too slow off the market. I believe AMC managed to do that and actually use the funds by issuing shares to pay down some debt. But the reason AMC could do that was because they were already planning on issuing debt, and they'd recently done a filing a few months prior. I believe it's AMC, but double check that if you wish to confirm.
When I wrote and spoke about GameStop on social media with other individual investors, our conversations were no different from people in a bar or on a golf course or at home talking or arguing about a stock. Hedge funds and other Wall Street firms have teams of analysts working together to compile research and analyze shares of companies. Individual investors do not have those resources. Social media platforms like Reddit, YouTube, and Twitter are leveling the playing field. The idea that I use social media to promote GameStop stock to
Go ahead and hit that thumbs up, guys, to support the stock YouTube channels.
Unwitting investors and
the good ones, which actually provide real value.
Influence the market is preposterous. My post did not cause the movement of billions of dollars into GameStop shares. It is tragic that some people lost money, and my heart goes out to them. But what happened in January just demonstrates again that investing in public securities is extremely risky. As I said earlier, I consider myself and my family fortunate with our investment. When the stock price broke $20 in December, I knew my investment was a success. I was so happy to visit my family in Brockton for the holidays. The money will go such a long way for us. We had an incredibly difficult 2020. Most difficult was the tragic and unexpected loss of my sister Sarah in June. I am grateful to be in a position to give back to and support my family. As for what happened in January, others will have to explain it. It's alarming how little we know about the inner workings of the market. And I am thankful that this committee is examining what happened. I also want to say that I support retail investors' right to invest in what they want, when they want. I support the right of individuals to send a message based on how they invest. As for me, I like the stock. I'm as bullish as I've ever been on a potential turnaround for GameStop, and I remain invested in the company. Thank you. Cheers, everyone.
So first of all, I think that was a great speech. Couple of points we need to hit on. So it must be stated a lot of people lost a lot of money on these stocks. I did do a couple of videos warning people, and everybody thought I was crazy. I said, guys, people are going to get burned on this. People are going to be left holding the bag when that stock crashes, and it did happen. But the realistic fact is, if a company is a poor company and that stock goes up extremely high, people are going to want to take profits. And if you get in late, you're going to be left holding the bag and you can lose a lot of money. I know a few friends who are still down on these stocks right now who I urge not to get into them. So that's the first risk we need to point on. My condolences to this guy's sister. He actually lost his sister recently. So my condolences on that point there. And I do support all retail investors to have equal rights, as it were, to hedge funds. But as the market is, we've got to do what we can do. I do in-depth research on this channel. Many YouTube channels don't really do that much in-depth research. So really, we're all sort of trying to find our best investing decisions and goals to actually succeed in the market. So now let's hear from the CEO of Robinhood, Vlad. So Vlad said that he basically shut down these apps at the peaks of these bubbles in order to protect investors, as the company had liquidity issues. Now, many people don't believe this because it seems they're heavily involved with the hedge funds who were shorting these stocks. So let's hear from Vlad now.
Just answer yes or no.
Chairwoman Waters, I appreciate the opportunity to address that.
Just yes or no.
We always felt comfortable with our liquidity and the additional capital that Robinhood raised.
Please answer yes or no.
We always felt
Get
comfortable
through my
with our
5
liquidity.
minutes. I don't have time. I just need a yes or no answer.
I stand by my statement. The additional capital we raised wasn't to meet capital requirements or deposit
So the
requirements.
gentleman,
Excuse me.
I'm reclaiming my time.
Do you think you owe your customers?
So first of all, he didn't even answer the question. She said, give me a yes or no. And he didn't even give a yes. He didn't even give a yes or no. So that's not very honourable. He didn't really answer the question. He just went on with his statement like a politician. Now, I hate it when public figures do that. Just be real. Just be honest and be real. Don't worry about getting sued. Just be honest and put your heart into it and just say the facts. Why did you shut down the trading apps?
Look, I'm sorry for what happened. I apologize. And I'm not going to say that Robinhood did everything perfect and that we haven't made mistakes in the past. But what I commit to is making sure that we improve from this, we learn from it, and we don't make the same mistakes in the future.
First of all, is that 35?
Yeah, what really got me with this whole issue with these apps and these names is if Robinhood wanted to shut down trading, why didn't they shut down trading in terms of buying and selling on these apps? But they allowed people to sell and not buy. And to me, that's completely wrong because they're effectively cratering the stock by only allowing people to sell. And that effectively caused a lot of retail investors to lose a lot of money. On a different note, if you guys want to switch platforms, there's links for Webull in the description below for free stocks. That's a little plug there. So firstly, I want to enlighten you guys if you've not heard some specific information about how much this guy made on that trade. So this is a YouTuber, and he didn't make just 10,000, 5,000, 20,000 pounds or dollars, shall I say. He said the rising stock value allowed him to turn an investment of around $53,000 into a figure nearing $50 million. So this is serious money, guys. This is not a few $1,000s. This is $50 million. And I believe if I go down here, so he basically purchased 50,000 shares and 500 call options on GameStop stock, obviously when it was seriously undervalued. So according to the Wall Street Journal, it was confirmed that his brokerage account held $33 million. So that's a serious amount. So it must be stated, those that got in early on this whole GameStop situation when it was very, very cheap price in 2019 and even early 2020, made quite a decent amount on this company, even life-changing money for some people. But those that got in late actually lost a serious amount of money. And those people that were left holding the bags were the most naive retail investors who didn't really know what the whole situation was about. They were told to hold the stock, hold the line, as the stock went up to $300, $400 per share. And then on the other end of the scale, the early adopters, they were cashing out and they made millions. So really, I think it is quite bad on both sides, but the real enemy of this whole situation, I think, is Robinhood. By shutting down trading, they didn't allow this whole situation to fully play out, so we could truly see who the winners and losers were. So now let's hear from Melvin Capital's CEO, who had a short position on GameStop. So this is Gabriel Plotkin.
Today to share my own personal experience and to be helpful in this conversation. I understand that part of the focus of this hearing is the decision of stock trading platforms to limit trading in GameStop. I want to make clear at the outset that Melvin Capital played absolutely no role in those trading platform decisions.
So basically, he's outright saying that he did not influence Robinhood. He did not ring them up and say, guys, you need to shut down those apps. So that's what he's saying, but we could obviously assume other things.
In fact, Melvin closed out all of its positions in GameStop days before the platforms put those limitations in place. Like you, we learned about those limits from news reports. I also want to make clear at the outset that contrary to many reports, Melvin Capital was not bailed out in the midst of these events. Citadel proactively reached out to become a new investor, similar to the investments others make in our funds.
So Citadel conveniently invested into their fund just as they were going through a crisis. Well, to me, that's a bailout.
It was an opportunity for Citadel to buy low and earn returns for its investors if and when our fund's value went up. To be sure, Melvin was managing through a difficult time, but we always had margin excess and we were not seeking a cash infusion. I am here testifying today far removed from my background. I grew up in a middle-class family in Portland, Maine. I went to a public high school. I studied hard and got into a good college. Upon graduation, I did not have a job. Today, I'm married with 4 children, and my time is spent with my family and on Melvin Capital, which I founded 6 years ago. I named Melvin after my grandfather, who ran a convenience store. I wanted the firm to represent his values, integrity, hard work, taking care of customers and employees, and commitment to excellence. Melvin Capital manages a hedge fund. Investors such as academic institutions, medical research and other charitable foundations, pension funds, retirees, and others invest with us.
So basically, he's trying to get rid of the image that all hedge funds are evil, because obviously on the Reddit groups, it's been stated and in YouTube videos, and basically retail investors are saying hedge funds are evil. They take advantage of the retail investor. So he's really trying to paint this picture as the family guy, the guy who's got this nice fund which is helping charities and doing a lot of work there. Some of this is probably true, and I don't believe personally all hedge funds are bad. I think hedge funds are just a business like any other. They're making money for their shareholders, and it's just a game like any other game. I don't think they purposely seek out to take advantage of retail investors in any personal way. I think that's just a side effect of them obviously having that information edge, that analytical edge over retail investors, and also that capital edge. So if they've got 20, 30, 40, 50 billion dollars in their fund and they decide to take a position on a stock, there will be collateral damage if retail investors are in that stock. So let's say you're invested into a company and a hedge fund or smart money decides to sell out a large position in that small cap stock, let's say, the stock will crater massively and retail investors can be left holding the bag because these whales can actually move quite heavy in the market. But I don't think it's a personal thing against retail investors. I think this is just the way the market is. And our goal as retail investors, we've got to try and negotiate the big waves, the whales. We've got to be more like a dolphin, just sort of swimming through, trying to find the best opportunities and catch the best fish.
We have 36 employees and hundreds of investors, and I feel a personal duty to all of them. Melvin specializes in the consumer and technology sector, including companies like Gamestop, AutoZone, and Expedia. Most of our investments are long. In other words, we buy stock in companies that create jobs, grow the economy, and develop new products for consumers. We do this after extensive fundamental research, sometimes literally for years. When our research convinces us that a company will grow relative to expectations, we make a long-term investment. When our research suggests a company will not live up to expectations and its stock price is overvalued, we might short a stock. Like with our long positions, our practice is to short a stock for the long term after extensive research. We also short stocks because when the markets go down, we have a duty to protect our investors' capital. There are laws governing shorting stock, and of course, we always follow them. In addition, it's very important to understand that absolutely none of Melvin's short positions are part of any effort to artificially depress or manipulate downward the price of a stock. Nothing about our short position prevents a company from achieving its objectives. It is just Melvin's view about whether it will. Specific to GameStop, we had a research-supported view well before the recent events. In fact, we had been short GameStop since Melvin's inception 6 years earlier, because we believed and still believe that its business model, selling new and used video games in physical stores, is being overtaken by digital downloads through the internet. And that trend only accelerated in 2020 when, because of the pandemic, people were downloading video games at home. As a result, the gaming industry had its best year ever, but GameStop had significant losses.
So really, they'd had this short on for a very long time, and 2020 was the year when they were probably going to cash in heavily on that position, but the retail investors obviously decided different.
In January 2021, a group on Reddit began to make posts about Melvin's specific investments. They took information contained in our SEC filings and encouraged others to trade in the opposite direction. Many of these posts were laced with anti-Semitic slurs directed at me and others. The post said things like, "It's very clear we need a second Holocaust. The Jews can't keep getting away with this." Others sent similarly profane and racist text messages to me. In the frenzy during January, GameStop stock rose from $17 to a peak of $483.
Wait a minute, so he's basically trying to paint the picture now that he, the big hedge fund, has been bullied by some people on the internet, by these internet trolls, who've basically been saying anti-Semitic words to him and actually text him personal things which are quite negative. So that's quite an interesting turn of events. I don't believe it's not true, but I think that was probably a small minority on the internet. It's the same, it's the way the internet is. Most people, I think, are decent people on the internet, probably 90% of people, 95% of people. That 5% you have internet trolls, and they'll put bad comments, they'll say things that are they'll take out frustrations, they'll say things that are maybe not that politically correct. But this is a Reddit group, this is YouTube comments. People say whatever they want to say. People could be frustrated by a situation that's happened in their life. But yeah, I don't think some of that's right. But I also think it's interesting the way he's trying to sort of paint the picture is the big hedge fund has been bullied by the retail investors on the internet who are investing their savings to try and beat them in the market. So we need to look at both sides of that, really.
I do not think anyone would claim that the price had any relationship to the intrinsic value of the business. The unfortunate part of this episode is that ordinary investors who were convinced by a misleading frenzy to buy GameStop at $100, $200, or even $483 have now lost significant amounts.
That is true. And that's what I said it previously. There was quite a few people, retail investors, quite naive, who've just started investing the past few months. They saw GameStop, they want that quick money, they want those quick returns in the market, and they decided to follow the crowd, investing into it. I did do a video called Warning Investors on this channel, but a lot of people didn't listen. They got heavily burned on that stock.
When this frenzy began, Melvin started closing out its position in GameStop at a loss. Not because our investment thesis had changed, but because something unprecedented was happening. We also reduced many other Melvin positions at significant losses, both long and short, that were the subject of similar posts.
So really, we do need to know that the retail investor now has a lot of power in the market. I personally call this viral investing. So to me, there's a very powerful phenomenon which has happened recently, and especially with smaller stocks. If people do a post about a stock on a channel, on a YouTube channel, on a Reddit post, wherever else that may be, these posts can go viral. And just like anything else that goes viral, if more people see it, that's more advertising for the company, and then more people will invest into that company. So we just need to be aware that's a really powerful force in the market right now. I'm going to end on this, guys. This is a little bit more lighter because it's a crazy situation that's gone on. But it does show that people are frustrated with the system. The financial system is set up to take advantage of retail investors, and people want an even playing field. And I think we should get that as investors. We should all have an equal playing field, an equal chance to beat the market. But yeah, this is quite funny. So I want to show you something, guys, to finish off. So there's been a conspiracy around that basically Roaring Kitty, who was obviously the leader of this whole situation, the YouTuber, that he is actually the same guy as Vlad, the Robinhood CEO, because they're basically a doppelganger. It looks like the same guy. They've got the same quite unique hairstyle, and they basically look quite similar. So yeah, that's an interesting point that's been raised all over the internet at the moment. So yeah, it'd be great for you guys to share your thoughts on this whole situation. To me, this is just part of the market, another crazy situation. Let's get on with investing. Let's get on with finding great companies for you guys to invest into and reaching our financial goals. But yeah, let me know your thoughts on this doppelganger, on this whole situation, on who the real bad guys were in this situation. I personally think the real bad guy in this situation was Robinhood, not necessarily the hedge fund, and not necessarily Roaring Kitty. I think he basically just got carried away with the whole momentum of what was going on with the stock, and I think the hedge fund was just doing a normal short like they would any other stock. So I think the real bad guys were potentially Robinhood for shutting down trading. That's my personal opinion. Obviously, don't shoot me, guys. This is just my personal opinion on the situation. But yeah, comment below if you guys found some value in this video. Feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. If you're new around here and you still haven't subscribed, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. And feel free to check out that first link in the description below if you want access to our thriving VIP community. And with that being said, thank you guys so much for watching. I hope you all have a tremendous day, and I'll see you in my next video. Invest safe.